Let's talk about buying down the interest rate. And I could do another video on temporary buy downs and things like that, but what we're talking about today is paying down points to get that interest rate lower, and does it make sense, right? And there's a very simple way to analyze this, guys. And I'm gonna give you a recent example. So buying down points is very expensive, right? So I had a buyer, the loan was gonna be $1 million, and they said, hey Matt, I wanna buy down the interest rate a half a point. And I said, okay, well, how much is that costing you? And it was $20,000, right? So I said, okay, $20,000. I said, how much are you saving on the monthly payment? And I think it was like $480. I said, okay, just to keep this simple, let's just round it up to 500, which would make it even more beneficial to you, right? So let's do the math on this. So if we take $500 a month over the period of a year, 12 months, that means you would save $6,000 in monthly payments that first year. So the question is, how long will it take you to get the $20,000 back, right? So if we go 3 years, we're at $18,000. So it's gonna take you about 3 1/4 years for that to make sense. So now you have to ask yourself, with what's going on in the world and the market, do you think interest rates will come down within 3 years? And if your answer is yes, then in no way, shape, or form does it make sense to buy down that interest rate for $20,000. Because once you give up that 20 grand to buy down that rate, the money's gone. You will never see it. It's gone forever. There's no guarantee the interest rate will come down. I wouldn't be gambling $20,000 on it though. I would bet my house that they're gonna come down next year. But again, I don't have a crystal ball. But I think you'd be better off just taking that $20,000, setting it aside and offsetting your own payment by that little piggy bank of 20 grand you got. And then when the opportunity comes to refi, just refi. Because guys, when you do a refi, they're just gonna roll the cost of the refi back into the loan. It's not gonna be 20 grand of cold hard cash out of your pocket. And when you buy a home, if you haven't bought a home yet, and anybody who has can vouch for me, you're gonna spend your money on all kinds of stupid shit, right? With the stupid things to put in the house, the new furnitures, this, that, and that. You spend money, I don't care if it's a brand new home, you spend money, and a lot of it when you get the keys to your new home. It's just who we are. We're human beings, we're consumers, that's what we do, right? So if you can afford the monthly payment and it's a good property, which we don't let people buy bad properties, keep the money in your pocket and wait for the refi. It's always my advice. The beauty of real estate is leveraging money. So as long as it's a good property, as long as you can afford the monthly payment, keep as much money in your pocket as you possibly can, because you're gonna be spending money on stupid stuff and you'll be able to refi later and they'll roll the cost of it into the loan. I hope that makes sense for you guys and it helps you out on your home buying process. If you have any other questions or want to talk about this further in depth, you know where to find me. My contact info is below. I hope you found this useful. Please click the subscribe button, hit the like button if you did, and we'll see you on the next one.